Welcome back to our weekly newsletter on the economy, where we bring you the latest updates on business and economic trends. Today, I will take you on a journey through this week's newsletter. To receive our weekly newsletter and stay informed on the latest economic developments, simply follow our website in the description below. First up, in Germany, business confidence has hit a 3-year low. The country is becoming increasingly pessimistic, with the business climate index in manufacturing dropping. Companies are particularly dissatisfied with their current situation, and this indicator has entered negative territory for the first time since October 2020. Next, we are off to Istanbul, where the airport is making headlines. Istanbul Airport is set to surpass 100 million passengers in the next 4 years, aiming to join the ranks of the world's top 5 airports. It's expected to host a whopping 75 million passengers in 2023 alone. Remarkable growth indeed, driven by effective government coordination during the pandemic. Turning our attention to industrial production, both the euro area and the EU experienced a 1.1% decrease in July compared to the previous month, when production saw a 0.4% increase. Industrial production figures always provide valuable insights into economic trends. Good news on the job front: the OECD unemployment rate remains below 5% in July. For the 13th consecutive month, a positive sign for labor markets in these countries. Shifting focus to the UK's private rental sector, a new measure reveals shrinkage over the past 2 years. This data, matching property transactions with rental advertisements, indicates a slowing but persistent decline in the sector, offering valuable insights into the property market's dynamics. And in a surprising revelation, the Netherlands takes the title of the world's largest importer of solar panels. Not only that, around 60% of these panels are re-exported to the other EU countries. In 2022, 12 billion euros worth of solar panels were imported primarily from China. This surge is attributed to the demand for sustainable energy alternatives amid factors like high gas and electricity prices, partly driven by global events. And moving on, in the Czech Republic, industrial prices saw a 0.2% month-on-month increase and 1.8% year-on-year rise. These figures gives us a glimpse into the economic landscape in this European nation. And now Jordan's Producer Price Index tells a different story for July 2023. It witnessed a significant 13.33% year-on-year decline, adding up to an accumulative drop of 4.27% over 7 months. These numbers indicate fluctuations in Jordan's producer sector. The IMF, always a key player in global economics, brings us an important update. Global debt, despite a brief dip, is once again on the rise. In 2022, it soared to 238% of global GDP, a 9% increase from 2019, totaling a staggering $235 trillion. While public debt slightly decreased due to fiscal deficits, private debt couldn't offset the pandemic's impact. China and low-income countries played pivotal roles in these developments, raising concerns about debt sustainability. Now let's focus on Singapore's economic dynamics. The import price index surged by 1.6% in July, largely driven by rising oil prices. Meanwhile, the export price index increased by 0.8%, with oil and chemicals leading the way. In the United States, the economic landscape is evolving rapidly. August saw wholesale inflation surge, with the producer price index jumping by 0.7%, marking the highest monthly increase since June 2022. Shifting our gaze back to Europe, annual inflation in the euro area dropped to 5.2%, and the broader EU, it decreased 5.9%, and these developments reflect ongoing changes in consumer price levels. Turkey's international service trade is making headlines. In 2022, Turkey's service exports reached an impressive $47.6 billion, indicating significant international trade activity in the service sector. Now let's explore a noteworthy report from S&P. Backlogs of work are suggesting potential global economic weaknesses on the horizon, but there is a silver lining: lower inflation. The PMI's backlogs of work index, an indicator of unfulfilled orders and pricing power, has dropped, raising concerns about output and employment trends. However, this may also imply reduced inflationary pressures, possibly steering us away from stagflation. The IMF is back with groundbreaking research. They have unveiled a roadmap for raising revenue in emerging markets and developing economies, potentially increasing tax-to-GDP ratios by up to 9% of GDP. This extra revenue could play a vital role in supporting essential government services and driving sustainable development. Low-income countries could boost their tax-to-GDP ratio by an average of 6.7 percentage points, with a potential 2.3 point increase through institutional improvements. And similarly, emerging market economies have the potential to raise their ratio by 5 points, with an additional 2 to 3 points achievable through institutional enhancements. The study underlines the significance of tax policy reforms and institutional improvements to achieve these goals. Our economic journey continues with a look at Switzerland. In August, Switzerland's producer and import price index dropped by 0.2%, marking a year-on-year decrease of 0.8%. And these numbers provide insights into Switzerland's economic dynamics. Shifting our focus to the UK, anticipation is building. The country's expected inflation rate has dipped to 7%, the lowest level since February 2022. Let's keep an eye on how this plays out in the coming months. The OECD's interim economic outlook for 2023 is here, and it raises some concerns. It warns of fragile global economic growth with expectations at 3% and persistent inflation averaging 6%. The report points out potential risks, including continued inflation, energy and food market disruptions, and a possible slowdown in China. In the United States, GDP growth projections stand at 2.2% for 2023, with a slowing trend to 1.3% in 2024 due to tighter monetary policies. South Korea takes center stage now. In August, the country saw a 1% year-on-year increase in producer prices, marking a significant rebound from 0.3% drop the previous month. This surge is primarily attributed to rising oil prices, driving the highest increase in factory gate pricing since April 2023. Mental health is a topic of growing concern. A study by Aon and TELUS Health has revealed some alarming figures. It suggests that a whopping 82% of Asian employees are at moderate to high risk of developing mental health issues. Among them, 35% fall into the high-risk category, while 47% are classified as moderate risk. The survey, conducted across 12 Asian locations in November 2022, also found that 51% of respondents felt more sensitive to stress compared to the previous year. The study sheds light on various stressors, including economic uncertainty, rising living costs, and geopolitical instability. And And our focus now shifts to the Eurozone's construction sector. In July, compared to June, we saw a notable rebound. Seasonally adjusted production in the construction sector increased by 0.8% in the Euro area and by 0.7% in the EU. And these figures provide insights into the construction industry's performance in the region. And we turn to Sweden. In August, the country's labor market showed some signs of a slowdown. The unemployment rate stands at 7.7%, and there has been a decrease in the number of temporary employees. And these indicators offer a glimpse into Sweden's labor market dynamics. The 2023 World Trade Report, published by the WTO, World Trade Organization, delves into the crucial role of international trade in shaping our future. It explores how trade contributes to building a more secure, inclusive, and sustainable world. The report emphasizes a shift in the narrative around globalization, highlighting the need to balance trade with essential policy goals such as peace, poverty reduction, and sustainability. While it acknowledges rising trade tensions and hints at reorientation along geopolitical lines, the report reminds us that complete deglobalization isn't entirely supported by the data. Portugal has been in the spotlight recently. In the second quarter of 2023, Portugal experienced significant growth, with its GDP marking a 2.3% year-on-year increase. However, it's not all smooth sailing. Portugal's industrial production price index took a hit in August, witnessing a year-on-year change of minus 5.2%. This decline marked the fifth consecutive month of negative change in the industrial sector. To add to this, inflation in Portugal surged to 3.7% in August, revealing some economic complexities. Heading north to Canada, inflation has been making headlines. In August, Canadian inflation rose even more than expected, with a year-over-year increase of 4%. This uptick follows a 3.3% increase in July, and these numbers reflect the evolving economic landscape in Canada. And final story, Turkey is on our radar. In September, the Consumer Price Index (CPI) in Turkey saw a notable increase of 5.1%, bringing it to 71.5. And these figures provide insights into Turkey's inflation trends, which are always a crucial aspect of economic stability. That wraps up our economy newsletter for today. We covered a wide range of topics. Stay informed and tuned in for more economic news in our upcoming episodes. Thank you for watching and remember to subscribe to our channel for the latest updates.